Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for March 31st, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Right now we can see that the previous session finished very strong. The early indication was that prices were rejecting below 2360. We watched that zone for a retest later on in the session, and price just pushed right through 2360 and continued higher, holding above that zone by the end of the day. And now you can see pulling back. So far this morning, we've had bulls coming in defending the overnight pullback, so that could offer an additional lift higher. So our primary idea, which was that this right here, this rejection and defending off 2330 would lead to 2370 and as high as 76 to 77.5, is still underway. The previous session we almost had a rejection here that could have led to a little bit of a pullback, but as I mentioned before, any pullback could have been a great opportunity for a continuation. So right now we continue to be in an uptrending behavior, and overall defending 2354 is the major key level to defend for bulls. Remember, this is the bottom of this key range, so reestablishing acceptance back above it after falling below it not only implies a move back to 2376, but could open the door to retesting previous highs along the way into 2401. So 2354 is still the key pivot, and right now bulls are defending it, and keeping it bid would imply a continuation to these upside targets. So let's continue to watch that as well. If we take a look at the intraday time frame for the ES, here we go. You'll notice the recent pullback here off of the highs. Again, the previous session, major rejection. Here's 2360. When price got back to it, it pushed through it, held above it, and continued. So very strong, defending it later on in the session. But here we are back down and trading here. So we've just pulled back off the zone. We're going to see how price responds should lower prices be reached in the 54s. But overall, all these late bears here could be used as fuel to continue higher and retest the previous session's highs into 66, 67. Let's take a look at crude oil. Here's a look at crude. Higher time frame of crude right now shows that price is very bullish at the moment. Very bullish. I mentioned that there's not usually triple bottoms down here, but this recent rejection here was very important. The way price pushed back above 47.30 that day was very bullish. And I mentioned all price needs to do is get above 48.42 to 48.50 because we have a lot of days down here. And if price can push through that level, we would not only see a retest of recent highs into 49.70, but we would likely go into 50.20 and 51.06. And so far we've continued onward and we've hit this one and this one, two of those three targets. 51.06 is the next one up. What you'll notice is how bullish this advance has been. Look at this. The low of the week here, Monday, big time slingshot move up. Midpoint of yesterday's trend day is being defended at the moment by bulls. That would suggest more strength as well. And that midpoint right now, 49.87. When I mentioned yesterday, as long as price remains above 49.70, we should see more strength. And that continues to be the case. So look for continued overall strength into 51.06 at some point here soon. Once we reach that target, we now have a key range that is in cement there, and we can use that key range for the next major directional price move in crude. All right, let's take a look at the intraday time frame. On an intraday basis, we've seen a little bit of a bounce off these recent lows. Overall, pullbacks have been defended, and the overall trend is still up. So here's the 49.70 level. That's S3 at the moment. Should price drop into that level, that's going to be a major area that bulls want to keep bid. At some point here, you have bears defending prices just above the previous session's close. So the stops are above 50.40 and 50.5. So above that zone starts to really trigger these stops, which would likely fuel that next move into 51.06 up top. All right, let's take a look here at the NQ. NQ right now in a trading range on the intraday time frame. If we take this out to the higher time frame, the daily, we can see price still hanging around recent highs. So we had a major rejection here, We talked about bulls defending 61s for a shot at retesting highs in the 54.40 and beyond. We got that. And yesterday we started to see initial rejection of the 54.40s. And you can see that price closed below that zone, or closed right at it. Didn't quite reject overall, but is still below it. We have a very predominant trend to the upside. And so fading these edges, you have to be very careful. There could be an opportunity to fade it across the way. Today we had to see how price responds off the 54.40s, and so far bears are defending that level. However, down below, we're seeing bulls still defend the previous session's low and any pullback in the current uptrend. So there could still be more action up here before we see a move any way on a swing basis. The trend is still to the upside, so you got to be cautious if you're looking to fade this high. The market is very, very bullish. Looking at the the NQ on the intraday time frame here, again, we were looking at 54.40 as the potential absorption zone the previous session. Because we had the big rejection, we were looking at 54.40 as a potential rejection zone here. It actually came a little higher into 45s. That's where they absorbed, and we've come off that level. So right here, 45s, very important. You can see price holding above the previous session's low, staying above 54.26 half would suggest a retest of 41 to 45, and right now that's the range. So fading that edge, fading this edge right now is the appropriate approach at the moment until we see expansion from this developing range. All right, lastly, let's take a look at gold. Gold is pulled back on the intraday time frame a bit here, and if you look at the higher time frame, you'll notice that 1250 gave out yesterday, but it was quite a fight. I mentioned before that 1250 was going to be the level to watch, and excuse me, when you see that level go offered here, at first we're looking for traps, and that's what happened. We got a trap and then a rally back up, but then it failed again up higher after the rally and eventually gave up intraday. So that was the over-under for the day, 1250. If prices could hold that level and reject it, we could see a slingshot higher. If price was going to close below it, well, 1240 was going to be the next key level below to watch. And now you can see that this is a zone that after this uptrend and this pullback, bulls are going to want to defend 1240 for a retest of highs and perhaps a test into 63 to 64.90. Failure to hold 1240 would roll this thing downward, and that's what I mentioned yesterday. Once you break 1250, we could be looking at a return back to 1232, which is composite VPOC. So 1250 remains the pivot. So any bounce up could be an opportunity for bears to defend here. So you have opposing forces, bulls defending 1240 for a shot here, and then you're going to have 1250 for bears looking for a continuation downward. So that's the approach right now. As I mentioned before, our primary idea has been an uptrend to these targets. But now that we've gotten to the opposite edge of the range, the uptrend has gotten a little bit stale here. We've gotten a continuation sideways instead, and now we got to watch for the next key move. Looking at the intraday time frame for gold, here we go. The intraday time frame shows again prices holding back toward 42s. You see a very tightly compressed pattern here for the day. This will likely not facilitate trade for long, so you're going to likely see expansion above 46, 47, squeezes back toward 53, right? And failure to get above that zone starts to hint at a retest of 1240s, which could be significant. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well.